In this video, we're going to be looking at 3 high-yield dividend stocks that you can buy right now. Before we get into the video, make sure to drop a like and subscribe. It really helps a lot. And let's get right into the video. The first dividend stock we're going to talk about today is Qualcomm, ticker symbol QCOM. Qualcomm is a semiconductor company. Qualcomm makes chips for Androids and iPhones. They're in a really strong market because the phone market is really strong, and as long as the phone market is growing and as long as people use their phones, Qualcomm is going to be making money. And since they have a patent on their product, it's really hard to create a substitute product. They have a dividend yield of 3.85% and a payout ratio of 59%. Although the payout ratio is fairly high, they're expected to grow their earnings by 25%, which is going to help them keep increasing their dividend. In fact, over the past 5 years, they have been increasing their dividend by about 9% per year, which is fairly high. And combined with a really high starting yield, this is an amazing dividend stock. A lot of investors do not think Qualcomm is a good dividend stock because they have 0 years of growing their dividend. However, this is inaccurate because they have been paying a dividend for over a decade. However, they only grow their dividend every 8 quarters or every other year. So on all financial websites, it looks like they have not been growing their dividend consistently every year. In reality, they're growing their dividend consistently. It's just every other year. So Qualcomm is an excellent dividend stock. It's also a really good value stock. Their P/E ratio is only 20, which is really low given that they're expected to grow 25% per year. The next stock on this list is Pfizer, ticker symbol PFE. Pfizer is a pharmaceutical company. They own popular brands of medicine like Advil, Chapstick, Detrol, and Xanax. During uncertain times, people are going to continue buying their products because it's an absolute necessity to purchase medicine. So their stock is actually pretty good given that we're in uncertain economic conditions right now. They have a dividend yield of 5% and a payout ratio of 56%. Their starting yield is really high. This is one of the best safe starting yields that you'll ever get. And with only a payout ratio of 56%, they're going to be able to grow that dividend consistently in the future. And they've been growing their dividend at about 6% per year, and they've been consistently growing it over the last 10 years. They're not going to cut their dividends. Although this company has 0 growth, their PE ratio of 11 is still really low. You can find so many other companies with 0 growth that have PE ratios still of 20 plus, and this only having a PE ratio of 11 is really good for a slow growth company. And the third stock on our list today is Caterpillar, ticker symbol CAT. They're a company that makes large machinery for construction sites like bulldozers. They virtually have no threatening competitors, and their products are the industry standard, which is going to allow them to keep their customer base during these uncertain times. And as of right now, the construction industry is not laying off their workers. This means that the demand for Caterpillar's products are not going to decrease dramatically given these uncertain times. Since construction sites are going to continue to operate, their earnings are going to be really steady. This is going to help pay the dividend. Now let's take a look at their dividend. They have a dividend yield of 4.1% and a payout ratio of 45%. They have a really high starting yield and a really low payout ratio, so it's going to be really easy for them to increase their dividend in the coming years. And they're really growing their dividend at a fast pace of about 7.7%, which is just going to make it so easy to have a really high dividend yield in the future. And they've been growing their dividend for over 26 years, so management would actually be foolish if they cut their dividend right now because it's going to really hurt their stock price when it's already really down. They're also going to lose a lot of trust with investors if they do. So there's no way they're going to cut their dividend or really slow down its growth. I hope the video really helps you find ideas for good dividend stocks. If you enjoyed the video, make sure to like and subscribe down below. Let me know down in the comments what dividend stocks you're thinking of buying right now.